Or lately, or maybe just shopping in general, I'm sure you've noticed that several prices have increased. Now, as the economy begins to recover from the pandemic, concerns are picking up about inflation. Vice President Steve Ringo from the DeWitt and Dunn Financial Services is here with some tips to kind of help you understand and prepare for the impact of inflation on your wallet. Good morning to you, Steve.
Good morning, Cleo. It's great to be here.
Thanks for joining us on a holiday weekend, especially. What do we need to know about the rate of inflation right now?
Yeah, so in April, inflation rose to its fastest pace in 12 years. So that's into 2008, 2009. And one of the main reasons is obviously our economy's taken such a huge hit from the pandemic. The short, medium, and long term ramifications of that. We know what the short term is, but the medium and long term are still unknown, and we're facing inflation right now. In addition to that, the Consumer Price Index, which measures a basket of goods, energy, housing costs, that all went up 4.2% in 2020.
So, Steve, how is inflation affecting everyday purchases?
Goodness, I mean, lumber's gone up 200 to 300%. You take a look at in April, the price per thousand board foot of lumber was up 1188. That's $1,188, and that's the highest it's ever been. And that's just one of many things. I mean, you take a look at steel, you take a look at gas prices, like you were mentioning earlier, food prices at the grocery store. Everything is super inflated right now, and it's really a challenge for people.
So, how can we actually prepare our finances for inflation, and will it go back to normal?
Right. So the benefit here is our economy is wide open right now, and there's a lot of opportunity out there. So for people that are out there, I think it's really important to try to bring down your debt. Take a break from the credit cards. While taking a break from the credit cards, try to eliminate your debt. And one of the easiest strategies that you can employ is a debt snowball, which is where you take your smallest debt and apply as much availability of funds that you have to that while still making the minimum payments on the others. You also want to stay the course, stay invested in the market. I think it's really a challenge for people that are getting close to retirement or already in retirement, because inflation is here and fixed income isn't really paying anything, which is cash, money markets, bonds, and CDs. So they're really forced to take unnecessary risks. So it's really important for people to sit down with a financial professional and really get a second opinion. You also want to make sure you have an emergency fund. Obviously,
Right.
a lot of people spent through their emergency fund during COVID, but any free dollars that you have, let's make sure that we build that emergency fund and that we reevaluate our portfolio and our finances on an annual basis.
Steve, I got some people watching us right now wondering if gas prices has anything to do with this.
Yeah, so gas prices, I mean, we take a look at just the time of year plus the attack from the hackers that had happened. I mean, that is really more, I think that's going to be more short term. I think it's the supply of the housing and just, the chips for the automakers. And it's just going to take our economy some time to get back to where it was pre-COVID.
You're right. It's going to take some time.
Yes,
Steve,
ma'am.
thank you so much for joining us. Like I said, especially on a holiday weekend, and I know we'll see you soon.
Yes, have a great one.
All right.